Good day to all of you. Our topic for today is all about the continuation of the gross income, which covers passive and other sources of income. Begin with the interest income. Interest income is an earning derived from depositing or lending of money, goods, or credits. Unless exempted by the law, interest income received by the taxpayer, whether or not used or used, is subject to income tax. So we'll start with the individuals or citizen and aliens. Except for non-resident aliens not engaged in trade and business in the Philippines, interest income from long-term deposit or investment. So, mga example niyan is savings, common or individual trust funds, deposit substitutes, investment management accounts, and other investment will be exempt from income tax provided that the following conditions must be met. Okay, may mga conditions siya before ma-exempt. First is the deposit investment must be evidenced by certificates conforming to the Bangko Sentral ng Pilipinas prescribed form. Aside from that, the same must have a period of not less than 5 years. Okay, klaro dyan. It must be have a maturity value of more than 5 years and in denominations of 10,000 or other denominations as may be approved by the BSP issued by banks. So, klaro tayo dyan kapag long-term interest ng exempted tayo, okay, mostly sa individuals, exempt lang kay alien, not engaged in trade in business, kasi 25% pa din yan, final tax. And the corporations, we have 20% to both domestic and resident foreign. Aside from that, we have 30% from non-resident foreign corporation. However, if the maturity value of that long-term interest was pre-terminated, so depende po yan sa years, okay? So we have less than 3 years or 3 years to less than 4 years and 4 years to less than 5 years. So we have a final tax of 20%, 12 and 5% to citizen and aliens. However, kapag not engaged in trade and business ka, lahat, if it is pre-terminated for for whatever years, it is 25%. Okay? So, same goes with the corporation, kay domestic 20% lahat, as well as kay resident foreign. However, kay non-resident foreign is 30%. Pagdating naman sa foreign currency deposit, ayan, so sa foreign currency deposit as per train law, nag-change na siya from 7.5% to 15%. So ma-observe nyo naman sa table summary na hindi na siya 7.5 kundi 15%, and you have to take note, okay, however sa aliens natin that is exempted. For corporation, we have 15% for domestic and resident foreign, and exempted po si non-resident foreign corporation. Okay, so for the interest income for expanded foreign currency deposit unit or offshore banking units, we have 10% for resident citizen, exempt for non-resident citizen, 10% for resident aliens. Okay, lahat ng resident, okay, are subject for this interest income of expanded foreign currency deposit unit na 10%. Pero yung mga non-residents are exempted. If you could observe the table summary. Now, for interest income on foreign loans, that is not applicable to most of the individuals and corporation except kay non-resident foreign corporation, which is subject to 20%. Now, for other interest income, we have interest income from bank deposits and deposit substitutes. So, aside from that, we have interest from loans, trade receivables or account receivable. Hindi po siya subject to final tax, kundi subject siya to normal tax or basic tax. Kasi nga, here, lending is the main course of activity. Therefore, these earnings derived from lending money, goods, or credits from one person to another without any withholding tax made. Since these interest earnings are received in its total amount, they should be subject to normal tax of the taxpayer. Since the interest income is earned in the normal conduct of business, and this shall be part of the income to be reported in the annual income tax return. Kaya siya subject to basic tax. Okay, so I will be adding some of the information lang for the interest income na tax exempt. Aside sa long term, ang maturity niya and prescribed by BSP form, denominated 10,000 or any prescribed by the BSP. We have also interest earnings received from cooperatives, exempt din siya. Okay, and aside from that, a tenant who paid interest to a landowner on the price of land under a tenant purchaser agreement or CARP. Okay, so that's the summary rules and other information that relates to interest income. Let's proceed with the royalty income. When we say royalty income, it's a payment or portion of proceeds paid to the owner of a right, such as oil right or a patent for use of it, or a portion of the proceeds from the work of an author or composer. So royalty may be classified as follows. Okay, it could be in general, royalty income includes those which are derived from natural resources or products such as coal, gas, oil, copper, silver, gold, and other similar products. So these kinds of royalty income are subject to 20% final tax in general. So as what you can observe on our summary table, so that's 20% to all individual and corporation, except na lang for our non-resident alien not engaged in trade and business kasi 25% pa din siya, and our non-resident foreign corporation which is subject to 30%. However, if the royalty talks more on the books, literary works, and musical composition, okay, the royalty income is subject to 10% final tax. However, kapag non-resident alien pa din not engaged in trade is 25% and non-resident foreign corporation is still 30%. Pagdating naman sa active royalties, okay, almost are part of the uh, basic or normal tax. However, non-resident alien not engaged in trade and business is still 25% and non-resident foreign corporation is 30%. And that's the taxability of the royalty income. So we'll proceed with the dividend income. So dividend income is a form of earnings derived from the distribution made by a corporation out of its earnings or profits and payable to its stockholders, whether in money or in other property. So such earnings may be exempt from income tax or subject to either final tax or on normal tax, okay, the year-end tax of individuals or corporations. So we have rules here pagdating naman sa dividend income. So if it is received by a domestic or resident corporation from a domestic corporation subject to tax, such dividend is tax exempt. Okay, ano ba yung magiging reason? It is because there is an intercorporate dividend principle. Therefore, from domestic to domestic, that is also tax exempt. If it's received by a resident for a resident corporation from another domestic corporation, that is also tax exempt. The reason is intercorporate dividend. Okay, so pure stock dividends, okay, dividends received from cooperative and pure liquidating dividends are tax exempt. Okay, so same din doon sa interest income which may cooperatives din doon na interest income, so that is also a tax exempt. What if the dividend is a cash or property dividend? This is subject to final tax if received by an individual or non-resident corporation. From domestic corporation, subject to income tax. So we have different rules here pagdating sa cash or property dividend. First rule is, if na-receive ng resident citizen, non-resident citizen, and resident alien, the final tax applicable here is 10%. So, look at the summary table rates. So, makikita natin na 10% po si citizen, non-resident citizen, at saka si resident alien. Okay, so if it is received by a non-resident alien engaged in trade and business in the Philippines, the final tax is 20%. While 25% naman if it is received by a non-resident alien not doing business within. So, if it is received by a non-resident foreign from a domestic corporation, the final withholding tax is 15%. Okay, so other dividends excluded from the rules na na na-state natin kanina are included in the computation of the taxable income. Kaya, if you could see on the rest of the table from dividends from foreign corporation, so this is usually or more of basic tax na or normal tax. Except lang talaga kay alien not engaged in trade kasi 25% pa din siya and 15% kay non-resident foreign corporation. Okay? So, ayan. Aside from yung mga nabanggit ko kaninang tax exempt, ayan, let me reiterate to you na dividends are tax exempt if there is a that is received from a cooperative, a pure stock dividend, nasabi ko yun kanina, and pure liquidating dividend. Kapag pure liquidating dividend kasi, ang nature niyan is it's more of return of a capital. Therefore, kapag yan yung binigay as dividend, hindi yan tax. Okay, taxable, kundi tax exempt. Okay, so ayan. Ano-ano yung mga subject to normal tax? Okay, or year-end normal tax if it is not included as a tax dividends, okay, tax exempt dividends, not subject to final tax, and if it is distributive shares of partner in professional partnership. So, mababanggit natin to mamaya on this part kasi yung mga distribution ng partners, okay, share in the profits will form as a income of a certain partner and that will be subject to normal tax. So we have different forms of dividend. So I already told you it could be cash or property and it could be stock dividends. So if that is a cash, ayan, that is the most common form of dividend and it is valued and taxable to the extent of amount of money received by the stockholder. Kung magkano yung na-declared, yung value na yun will be the basis of the computation of the dividend. Okay? So ayan. So, we have also property dividend. So, if that is not declared as cash, it could be declared as property dividend. So, other than cash or in a form of money. So, it could be dividends in any kind. Pwedeng merchandise, pwedeng properties, or property, plant, and equipment. Depende sa i-declare ng management. So, the property dividend is usually valued and taxable to the extent of the fair market value of the property received. Saan ba? Date of declaration tayo magbe-base. Okay? Yeah, other example of property dividends aside sa merchandise inventory could also be shares of stocks. Okay, or treasury stock of the issuing corporation rather, if it is acquired at a cost different from its par value. Okay, so let's proceed with the stock. Kasi stock dividend could also be property dividends. So generally, stock dividends are not taxable if that is pure stock dividends, guys. So hindi siya magiging taxable. Magiging taxable lang siya if it represents distribution of earnings. Okay? Pero general rule, pure stock dividends are not subject to tax because they simply involve a transfer of the retained earnings to the paid-in capital account except na lang when the following circumstances exist. Okay, kindly listen to this. Generally, they are tax exempt, pero if these instances will happen, then this is taxable na. Okay? For example, there is an option that some stockholders could take cash or property dividends instead of stocks. And that's one reason. Another reason is some stockholders exercise the option to take cash or property dividends. So may mga options tayo. And the exercise of option resulted in a change of the stockholders' proportionate share in the outstanding of shares of the corporation. So, dito, pure stock dividends, hindi siya taxable except na lang if there is an option on the part of the holder and the issuing company na it could be recorded or given as cash or in property in lieu of cash. So, if the exercise of the option will result in the change of the number of the stockholders' proportionate share, nag-change yung share niya in the company, then that will be taxable. Okay? However, if that is a liquidating um, stock dividend, that is not taxable unless there is excess in the cost of investment. Kasi yung liquidating dividend, it's more of returning your contributed capital. Okay? So, scrip dividend is issued in the form of promissory note and is taxable to the extent of its fair market value. So, it is taxable in the year when the warrant was issued. Okay? So, let's proceed with the annuities. So, annuities refers to the installment of amount paid for life insurance coverage returned by an insurance company. So the annuity received that represents interest is taxable. Okay? Those that represents the interest only is taxable and shall be included in the gross taxable income, while the amounts that represent return of premium are not taxable. So ito lang naman yung babantayan natin with regards to annuities. Okay, so kapag return of premium, hindi taxable. Pero kapag yung na-receive represent interest, and that is taxable and part of the gross taxable income. We'll proceed with the prices and winnings. Okay, so if the taxable prices, which is amounting to 10,000 and below, okay, and above 10,000. Now, under the old NIRC, itong nasa summary rates na nasa taas, okay, kapag 10,000 and below, this is subject to basic tax, except for non-resident alien not engaged in trade and business, which is subject to 25%. Okay, so for the corporation, this is also subject to basic tax or normal tax. However, the non-resident foreign corporation is 30% income tax. If the prices amounts to above 10,000, 20% po hanggang alien, engaged in trade and business, while the not engaged in trade and business is 25%. Okay, while the corporation, mapa-foreign man or domestic, basic tax siya. Okay, while non-resident foreign corporation is 30%. Kapag winnings naman, okay, in general, that is subject to 20% tax, while kay non-resident alien not engaged in trade and business, that is exempt. Okay, kay foreign, basic tax siya, 30% naman kay non-resident foreign corporation. Pero pagdating kay PCSO and Lotto winnings, exempt po siya. Okay? Under old NIRC. However, we have to take note sa statement doon sa baba, PCSO and Lotto winnings exceeding 10,000 pesos of citizen and resident alien. So citizen, when we say citizen, it could be resident citizen and non-resident citizen plus resident aliens is 20% under the train law. Okay? If it exceeds 10,000. So, yan lang naman yung changes na naka-include doon sa revised tax code natin under the train law. Okay? And we have to remember that kasi dati, PCSO and Lotto winnings regardless of the amount that is exempt. Ngayon, if that exceeds 10,000, okay, that is 20% under the train law. Ayan. Part of the gross income is partners' distributive profits from professional partnerships income. So I already gave a sneak peek of this topic kanina sa dividends. Okay, it's still considered a dividends pero hindi siya subject to final tax kundi magiging part siya ng gross income ng partner. Kasi nga, 'di ba, in a partnership, their intention is to divide the profits. So, kapag may mga profit sharing, that profit share, okay, of a certain partner will be taxable, okay, as normal tax. Ayan. So, we will be discussing more of that in a separate module pagdating sa partnership topics. Ayan. So, we have other sources of income. So, these earnings are categorized as other sources of income because they are generally incidental earnings or not common source earnings. Usually, these are income, ayun, but not limited to the following. So, first, we have bad debt recovery, tax refund or credit, damages recovery, and income from whatever source. Actually, naka-include dito si annuities pero we already discussed that previous slides. Yan. So, we'll begin with the bad debt recovery. But before we proceed with that bad debt recovery, let me explain the tax benefit rule. So, tax benefit rule is a general principle in taxation which states that if a taxpayer deducted an item on his income tax return and due to that deduction, nag-enjoy ng tax benefit si taxpayer. Paano niya na-enjoy yung tax benefit? For example, because of that deduction, na-reduce yung income tax niya. Thereby, and in subsequent year, recovers all or part of that item. So, nung pag-deduct, naka-enjoy ng tax benefit si taxpayer, nung pag-recover ng item na dineduct na yon, okay, he will recognize gross income in the year the deducted item was recovered. So, for example, bad debts recovery. Ni-write off natin siya during the taxable year and then subsequent years, ayan, na-recover natin siya. And nung pag-deduct natin ng bad debts na yun or pag-write off natin, naka-enjoy tayo ng tax benefit which is na-reduce yung income tax natin. So, from the moment na na-recover natin yon, that will be taxable on the year na na-recover natin yung bad debts na yon. Okay? However, kapag yung deduction is hindi naman nag-enjoy ng tax benefit during the deduction, so, from the time na mare-recover siya, hindi din siya taxable. Okay? So, yan lang yung tatandaan natin sa tax benefit rule. Okay? So, bad debt recovery. In the bad debt recovery, may requisites po tayo dyan. Okay? There must be a valid and existing debt arising from business or trade of the taxpayer. The debt must be actually ascertained to be worthless. Therefore, kapag worthless, na write-off jud siya during the taxable year. The debt must be charged off. Okay? So, for taxation purposes, bad debts are considered the amounts of the receivable being ascertained worthless to be written off during the year. Ayan. So, when a written-off receivable has been recovered in the succeeding year, the recovered amount must be included in the gross income during the taxable year of the recovery. So, I already stated that a while ago. So, paki-remind na lang. However, under the doctrine of equitable benefit, the amount recovered is only taxable to the extent of the tax benefit in the year the account was written off. Okay? So, as another sources of income is tax refund. So, as a general rule, refunds from taxes paid are taxable except under the following. So, general rule, taxable sila, pero etong mga babanggitin ko will be not included in the taxable income. Example, yung mga national taxes natin, estate tax or donors, Philippine income tax, stock transaction tax, and value added tax that was claimed as input tax. So, tax refund is subject to tax benefit rule also, which states that the refund of tax shall only be subjected to tax if such tax was previously deducted from gross income resulting in the reduction of reported taxable income. So, as a rule, tax paid is deductible, the refund is taxable. And if the tax paid is not deductible, the refund is not taxable. Okay? So, we have to proceed with the damages recovery. So, damages recovery is an amount received by an injured person as payment for income or payment to compensate the damage to property, injury to person, or loss of life. So, ano yung magiging tax rule natin dito? So, as a rule, recoveries that of damage representing compensation for loss of profit or income are taxable. So, halimbawa, nasagasaan yung isang empleyado, okay, naka-injured, binayaran mo yung mga possible income niya, okay, na let's assume na hindi siya na aksidente, yung mga possible income niya. So, that is taxable kasi that will represent compensation for loss of profit. But, however, kapag recoveries that are to compensate the damages to the property, injury to the person, that is not taxable. Okay? So we are now on the last part, which is income from whatever source. It means inclusion of all income not expressly exempted within the class of taxable income under the laws, irrespective of the voluntary or involuntary action of the taxpayer in producing the gains and whether derived from legal or illegal sources. So, ayan, ika-classify natin ito as legal or illegal sources. So, kapag ang mga example ng legal source, that is employee salary, bonus, and commissions, rebates of a medical representatives. Example ng mga illegal sources naman is yung gains natin sa gambling, kidnapping, extortion, smuggling, and embezzlement. Ayan, so those are illegally obtained funds. At kapag na-obtain mo yan, you are allowed or you are obliged to declare it as an income and that is taxable. So, ayan, as a rule, illegal income is taxable. Pero usually, walang nagde-declare ng mga illegal income. But under the tax law, okay, that is taxable. Income obtained through illegal means is included in the wrongdoer's gross income even though he is obligated to return when it was discovered or when it is discovered. The mere fact that a transaction is illegal does not exempt it from income tax laws. So, ito yung magiging madugo. Nahuli ka, taxable yun sa'yo, pag binalik mo pa. Okay? So, ayan. So, the courts have sustained the BR Commissioner's determination of illegal gains from such records as bank deposits or on the basis of commissions paid out and even from a formula determination based on the nationwide experience. So, what if there is an embezzlement of funds? So, magiging income yan without the consent, okay, with an obligation to pay. If the embezzler reaps the fruit of his crime without restriction as to disposition, he is in receipt of income, though it may be claimed he is not entitled to the money, and may be adjudged liable to restore its equivalent. When reported as income, actual repayment of embezzlement fund will give rise to deduction. So, yan yung mga examples ng income from whatever sources. And those are taxable under the tax code. So there you have it, the part 2 of your gross income, which represents some of the passive income and other sources of income. So I hope that this lecture is helpful for you in order for you to answer your questions at school. So thank you so much and see you next meeting for our next video tutorial.